Jim Munchback here. We're about to start a new lesson, a new lecture in personal finance at the Bauer College of Business at the University of Texas. So, welcome if you're joining us on Facebook Live or YouTube. We're live streaming now. I'm going to jump on over and check in with the Zoom room. Looks like we've got some folks to come into the Zoom room. Welcome, welcome to the Zoom room. We're live. So if you would, hey, everybody in the Zoom room, Gavin, good to see you. Laney, hello. If you would do me a favor and go ahead and chat in the time that you arrive. And also just let me know you can hear me, please. I appreciate it. Gavin, I'm going to ask you to do me a favor. You've been helping me out a whole lot this semester, and you will probably get some extra points for that. So I appreciate it. But what I want to ask you to do is, while we're just waiting to get started here, you see these links that I have on the screen. I'm assuming you can see those, right, Gavin? I'm going to jump into the chat. I don't see the chat. Yeah, you can hear me. You can see them. Cool. Thanks. Will you do me a favor and just open a new browser tab and just go to uhplaylist.com and then let me know. Maybe grab a screenshot and post it in the chat if you can, just to let me know where it takes you. Hopefully it takes you to this semester's playlist. That's what I'm trying to confirm. And then after you do that, if you'll go to uhzoom.com, I just want to make sure that my redirect technology is working to take you to this Zoom meeting. So you won't be able to join the meeting until I allow you to. But if you could just check to make sure the uhplaylist.com goes to this playlist. And anyone else watching as well can do that and leave a comment below. I appreciate it. Just help me know that everything's working here. I've had some trouble with these links. This is kind of new this semester. I set up these domains with the redirect links so that each semester I can update where the redirect goes into each specific, the playlist, the Zoom meeting, and the group me. So we have a new group me every semester. We have a new playlist every semester. The Zoom link shouldn't change, but I've had a little trouble with that. So just trying to confirm that everything's working. So Gavin, if you can do me that favor, that'd be great. If anybody else wants to try to do me that favor, that'd be great too. In fact, I think I'm going to make that this week's secret class collaboration. Just check these links, and if they go anywhere that they're not supposed to go, grab a screenshot, put that into your article, and that will be super helpful for me and for your cohort. Like I said, I'm ready to get started. Looks like, okay, the group me is working. The playlist is, Gavin, you are awesome, dude. Thank you. So the Zoom, now I'm not sure, we can't really tell, I guess, if that Zoom link is perfect. It just shows Zoom. That's cool though. I'm going to see if I can, I'm going to grab those screenshots somehow. If I knew how to do that, I would grab them and share them, but I'm not sure I know how to do that. Anyway, thank you very much. It looks good. So the group me definitely worked. The playlist definitely worked because I see my mug there. Here's all three of the links in order. So Gavin, you can't really tell if the uhzoom.com is taking you to the right meeting. So I'm going to just play around with that and try to make sure. So anyone else watching, if you could specifically just help me figure out is that uhzoom.com, because that's what I put in your syllabus. So imagine if you're me trying to be efficient. Every semester I have all these new links, and they're weird links. Like a playlist link is like 27 feet long. You know what I'm saying? So it's just much easier to create a domain and redirect it. So that's what I've done. Thank you, Gavin. I appreciate your help. As always, you've been super helpful this semester. So those are the links. I'm going to get rid of that. This week, we're going to talk about insurance planning. And I do want to try to answer a couple of questions that I am getting. So let's see if I can jump into I don't have it handy here. Let me see if I can find last week's Credit Crush assignment. It's not letting me open that. There we go. Yeah. So last week, last week was negotiating. You guys did a great job on negotiating. So there wasn't a whole lot of there weren't a whole lot of questions related to that. Some folks, some students got a little kickback because they didn't tell me what they were going to negotiate. So if that was you, if you got feedback from me, whether it was based on your early submission or your regular submission, which I haven't graded everyone yet. But if you do get that pushback, it's just part of the assignment to tell me what you're going to negotiate. That was kind of the whole point of the bargaining and negotiating, to figure out where are you in that. Remember, we did side one and side two. Which side of the room are you on? That was part of it. But also, I wanted you to think about what could you practice bargaining and negotiating moving forward. So for those of you, most of you did an awesome job on that assignment, but some of you didn't include that. You didn't tell me what you were going to bargain or negotiate, and so you got some deductions. So anyway, so again, this week's secret class collaboration, I'm going to say it again, are these links. I just need your input. Can you get to these? Just check them out. I want to make sure you are aware of this semester's links. This is new this semester. I just purchased some domains to make it easy for me, easy for the next cohort. So if you would just click on each of these 3 links and confirm to me that they work, that they go where they're supposed to go. So uhplaylist.com should go right to this semester's playlist. I know it does because Gavin just confirmed that. Number 2, the Zoom meeting link, that's the one I'm a little not certain on, but hopefully it goes to the personal finance, the weekly Zoom meeting. Had a little trouble with that, so I'm trying to make sure it works. And the GroupMe, it's uhgrp.com. Those are the 3 links. Each one takes you to a specific page, a specific tool, a specific resource for this semester. So next semester, I'll just change the redirect, and then I'll ask those students to do the same thing. So that's this week's super simple secret class collaboration. If you're missing it, I will give you some deductions and some feedback, because as you know by now, I'm having some trouble getting folks to watch these Zoom meetings, and they are required. So you do not have to be here. We have a very small number of students here right now, which is totally fine. But at some point in your week, you have to watch the Zoom meetings. So Playlist will take you right to all the videos for this semester. So I'm going to get rid of that, and we're going to jump into this week's assignment, which is insurance planning. I guess before I do that, I should talk about spring break. And I don't have anything to put on the screen about spring break. I should. So as is sometimes the case during spring break, when I do the syllabus, I have to figure out when is spring break, and I have to stagger the assignments and the due dates. And apparently, occasionally I make a mistake with that, because it's kind of like doing that homework assignment where, the train A leaves the station at 10 a.m. and train B leaves, and that whole word puzzle. I always had trouble with those. And that's kind of what it is when I do the syllabus each semester during spring break, trying to figure out which assignment do we, postpone. So I made a mistake. I've made corrections in your syllabus, so the due dates should be correct. And thank you for the students who pointed out that I made that mistake. I'm sorry, especially that it took me so long to figure it out. But I do appreciate it. No big deal. So I'm going to tell you how we're going to deal with those due dates, those new due dates and the assignment due dates. The big question I received, which I appreciate, is will you still receive the early submission extra points, and how will that work? So I want to tell you how that's going to work. Just think of it as, I think of it as the most liberal, generous possible way that we could do this. So I've moved one assignment due date to be a week later. And so your assignment due date, you have 2 assignments due on the Tuesday at 10 a.m. following spring break. So no assignments are due next Tuesday. I left my watch and I don't remember the date today. And I can't look at my phone because I'm using it as a webcam right now. But anyway, next week during spring break, you have no assignments due. You did have an assignment due next week, and I just moved it forward. So here's the deal. You will receive extra points if you turn in either of those assignments, both of those assignments, before next Friday. So you have 2 assignments due the week after spring break. And please, listen close, pay attention, post this in GroupMe for the students who are going to have this question. Those of you who are watching this Zoom meeting, whether you're watching live, whether you're watching at 2 in the morning on Saturday, during spring break, it doesn't matter. If you're paying attention right now, you will be able to answer this question. When do we need to turn in our assignments, and what about the extra points? You will get the extra points if you turn your assignment in on Friday before 3 p.m., and that is during spring break. So if you can do it this week, both assignments are available now. So I would encourage you to knock those out. They're not difficult. One of them is this week's assignment, which is Insurance 101, and we're going to talk about that now. But I just want you to know I'm going to be as liberal as I can possibly be in terms of giving you the extra points to incentivize you to turn these assignments in early, so you can get a 20% bump in your grade, and you'll get some feedback from me if you're missing something. So let's jump into the assignment so you know how to do this week's assignment. This week is assignment week number 8, Insurance Planning 101. I'm going to show you how to add insurance to your plan. So if you're watching this video on YouTube or Facebook, you should have a link, as always, to what I'm looking at. This is at missionalmoney.com, and it is called Insurance Planning 101. So the link that's in the video will take you to this post, and there's a lot of information in this post. So I'm going to just tell you as we jump into insurance that insurance, and I'm going to try to teach you about insurance in 1 week in 1 lecture, which I won't be able to do. Insurance is, however, one of the 7 essential elements in personal financial planning. So there are 7 elements. I wish I had that ready. I'm going to see if I can find, let's see if I can get this to show. That is a picture of a tick. And you can see that tick is, let me get this out of the way. That out of the way, get that out of the way, so you can see Mr. Tick. That's an illustration drawn by my friend Taylor Springle. Isn't that beautiful? So it represents an acronym, and the acronym is Free Tick. So let me see if I can get Free Tick showing. I'm going to get rid of Mr. Free Tick. I'm going to put up, these are the elements of financial planning. So if you want to know, if you are currently studying personal finance, if you want to know what are the essential elements of a personal financial plan, there they are. So we start with, let me just get these out of the way and I'll walk through them real quick. So again, this is the free tick up. You're not going to see the free tick. So the first one is financial independence. So just think of these are, again, this is an acronym. So this is how, when I became a certified financial planner, this is how I remembered the 7 elements of personal financial planning. And these are, when I studied to become a certified financial planner, these were everything related to a financial plan falls into one of these categories. So I created this acronym. And when I wrote my book, Make Your Money Count, I outlined these 7 elements. So it starts for me with financial independence, which is another word for retirement planning. So it's like the number 1 category of personal finance is retirement planning. I call it financial independence because in terms of an outcome, why would you do financial planning? My number 1 reason would be because I want to be independent. I want to be financially independent. And I found that for most people that makes sense. So free tick starts, this acronym with 7 elements of financial planning, starts with financial independence, the big outcome we want from actually doing the work related to personal financial planning. So I hope this makes sense to you. I hope this is relevant for you this semester. The next one is risk management. So let me just get rid of everything except risk management because risk management is what we're going to talk about today. It's insurance planning. How do you manage risk? And so that's what we're going to talk about today. In your work this semester, you're going to do some work around retirement planning. We're not going to do a lot on estate planning, but you do have some content in this course to help you understand the basics of estate planning. Not going to do a lot about education planning, but these are also, again, elements of personal financial planning. You will do some work in tax planning because part of this course is the second law of personal finance, which is the law of tax advantaged investing. So investing is a big part of personal finance, as you know, and we will be jumping into investment strategies next week. So investment 101 is coming, but today I've got to try to cover insurance planning or risk management, which is a really important part of personal finance. And there's no way that I can share with you everything that you would possibly want to know about insurance planning. It's impossible. It's a huge topic. And if there is one thing on the planet that I'm an expert in, it would be insurance planning, because I have a lot of letters after my name, and those letters mostly relate to professional designations relative to the insurance field: CPCU, CLU, CHFC, CFP. But insurance is a huge part of financial planning. So we're going to jump into that in just a second. Before we do, though, I just want to mention the 7th element of personal finance, which really relates to the first law of personal finance, the law of spending and saving. Spend less than you earn so you can save more for what matters most. So that's cash flow management. So again, this is just a summary, the 7 essential elements of personal finance, with this Mr. Tick, free tick, as the kind of memory mnemonic, I think is what it's called, just something to help you remember the 7 elements of personal finance. So I was going to use that this week as the secret class collaboration, but I'm going to probably save that for next week or the week after, or maybe I won't get to it. But anyway, I hope you'll kind of make a mental note of the 7 elements of personal finance, recognizing that risk management, which is what we're going to talk about today, is a very integral part of personal finance. And the memory guy there is Mr. Freetick. So back to the lesson. Again, this is in the link to this post is in the video. And I'm just going to tell you 2 things. One, you're going to add insurance to your financial plan this week. You're going to add homeowners insurance to protect that house that you just bought. So I'm going to show you how to do that so that you don't get any deductions when you add insurance to your financial plan. Number 2, you're going to actually get a quote for car insurance this week. So you can use your pretend car to get an insurance quote. I would warn you not to go online and just Google insurance quote and then just start getting an insurance quotes online, because what you will get if you do that is you will get inundated with insurance salespeople trying to sell you car insurance for the next 10 years. So what I would encourage you to do is go to your current carrier. If you have a license and you have insurance on your parents' policy or whatever, go there and get a quote to add that cool car that you put in your plan. Get a quote just to see what it will cost to cover your car. That's what I want you to know this week. I want you to understand the basic coverages relative to a car insurance policy and also a home insurance policy. And I'm going to just put up different. So I'm going to just start talking about insurance. And I'm going to tell you right now that insurance is, like I said, it's a very big topic. And there's tons and tons of minutia in insurance. I was teaching at Rice. They have a CFP program, and I had the privilege of teaching the insurance component for professionals who wanted to earn their CFP designation. And I had the privilege of teaching the insurance portion of that, the risk management portion of that. I would say it was probably one of the most challenging things I've ever done, because there's so many things in insurance, and you're seeing some of them go by the screen right now. I just took a list of the major insurance policies or major insurance types that are involved in personal financial planning, like health insurance. We're not going to talk about health insurance. It's really just, there's too much in the field of health insurance. There is so much to talk about, and I'd love to do that. I have tons and tons of minutia in my mind about health insurance, but we're not going to do that. But it is one that you should be aware of, and I hope that when we talk about health insurance or life insurance, another big topic, those are the sand. That's the beach. I don't know why I have that piece of text going. This is for disability insurance, which is another big piece of insurance planning. Disability insurance is probably one of the things that is most important for you as a young person, and one that is least talked about. So you're not going to find any super influencers talking about why you need disability insurance, but trust me, it's a very important part of your insurance planning program. I had a little accident a week ago today. I was driving my motorcycle and I laid it down. I was on a dirt road, and the dirt road literally had a 90-degree turn. I didn't know it was there. First time on that road, and I'm hurting. Fortunately, I was wearing a helmet and I didn't get hurt worse. But believe me, this week, disability is a very relevant topic to me, and it should be to you too. We're going to talk about car insurance mostly today, which is what you're seeing now. Car insurance covers you for a lot of things, and I want to make sure you know what the major coverages are, because you're going to spend a lot of money on car insurance. You're going to spend a lot of money on insurance in general. And if I could teach you one thing this week, it would be to become a good consumer of insurance. Because if you look at your budget, for the rest of your life, insurance is going to be a big part of your budget. Risk management. There's lots of ways to manage risk, but I want you to learn I just want you to understand the basics of insurance so you can become a better consumer starting now. And it's not that difficult. So we're looking at pictures of things that are called, that's apparel right there. If you wonder what those termites are doing on the screen, they represent a peril. We're going to talk a little bit about the perils. Perils are what are covered. That's why you buy insurance, is to provide protection or coverage against certain perils, certain risks, certain exposures. That is a fire. We've had some big fires in Texas in the last couple of weeks, still going. I'm not keeping up with them very well, but fire is a huge peril for cars, for homes, for businesses. So we're going to talk a little bit about how that works in a homeowner's policy. This image here, this video here, shows a gentle little lady, older lady, and her family, and a nurse preparing for long-term care or nursing home coverage, which is, by the way, if you didn't know this, statistically, long-term care is 1 in 2. 1 in 2 people are going to require long-term care insurance over their lifetime. Why do we have a blank screen? We're starting over. So that's a little screen show I put together this morning just to try to highlight the basic coverage types that I would like to expose you to in this lecture. But again, there's no way I can cover them in detail. I just wanted you to be aware of the topics that we're going to be covering. And so if you go to this post, you'll see in the beginning, I basically talk about your actual insurance assignment, because you're going to get an insurance quote. And doing that, in my opinion, one of the best ways to learn the coverages in a car insurance policy is to get a quote. Now, if you own a home, if you happen to be one of the students in the course that owns a home, you should get a quote on your homeowner's insurance too. I'll be happy to review those with you. Your car or your home, all you got to do is send it to me and say, hey, if you're really trying to figure out what are the best coverages for you, I'm happy to take your quotes and review them with you and make sure you understand the coverages that you're applying for or that you're getting a quote for. Super important. It's the best way to become a good consumer of insurance. You're going to spend a ton of money on insurance in your lifetime. And if you're, I was going to say stupid, that's not a good word. I know it's going to trigger some people. So let me just say, if you're uninformed, if you think insurance is just too complicated, if you avoid learning and understanding the basics of insurance, then when you meet somebody like me, I don't know if you've read any of my books, but in each of my books, I say in the beginning, I am a recovering sales addict. And I say that because I recognize that in any business where you get paid to sell stuff, there is a tendency to sell stuff. And if you're an insurance agent, which I was for many years, you get paid to sell insurance. And it's super easy to sell insurance to people who are uninformed, because insurance is something that protects you against things that are bad. And so it's easy to sell insurance because you can scare people, and people do that all the time. And I want you to be kind of immune to the scare tactics. I want you to be a well-informed consumer of insurance, and that's why you're going to get an insurance quote this week. So all that to say, insurance is complicated. There is tons of minutia, which is why teaching that element of the CFP program at Rice University was not my favorite thing in life to do, because those professionals expected me to teach them all of the very minutia in insurance, which in my opinion is less important than understanding the major coverages. So I want you to understand the major coverages, starting with collision and comprehensive. These are the two coverages that in your auto insurance I want you to understand this week. Uninsured and underinsured, these are all things you're going to be getting. These are all coverages that you're going to have to basically make a choice on, make a decision on when you get your car insurance quote. And each one of these coverages influences the price of your auto policy. So when you start to get the quote, before you enter it into your financial plan, you have to know what coverages are you going to buy, what coverages are you going to pretend to have on your pretend car. And these are the coverages that you're going to be looking at in that process. And then there's homeowners insurance. Now, you don't have to get a quote on homeowners insurance, but you do need to review these coverages. And in your financial plan, you're going to see some data cards that will have like how much coverage, how much are you paying for your insurance. So all of those things are explained in Money Study Group. You'll see the data cards. You'll see what information you're going to be adding. In fact, I think I'm going to turn on, let me see, I'm going to put this on so you don't have to see me scrolling, because otherwise if you see me scrolling, you're going to become dizzy. I always hate it when I'm watching a video and somebody starts scrolling and I'm watching the video. Anyway, I'm trying to protect you from that. I hope you appreciate that. So I'm going to show you, this again is the post that I'm looking at, which is linked in the video. These are the types of insurance that were on that little screen show. So I'm just scrolling through those. The two that you're going to want to focus on this week is auto insurance and homeowners insurance, because those are the ones you're going to be required to add to your insurance policy. Here's an interesting thing, though. If you are, say you're not a homeowner and you rent, renter's insurance is a fantastic product. It's very much almost identical to a homeowner's insurance policy, except it's very, very, very much less expensive. And the reason I want to mention renter's insurance is because if you are a renter, most people don't have renter's insurance. And I always tried to sell renter's insurance to my young clients when I was a State Farm agent because it provides a tremendous amount of coverages, both for your personal property and for your personal liability. So again, it's identical to the homeowner's policy with one really big exception, which I'll tell you about in just a second. But first, I just want to highlight for a homeowner's policy and for a renter's insurance policy, that package comes with Section 2, which is personal liability. Hugely important. So if you do something that where you're negligent, where you are irresponsible, or you make a mistake, or it's just an accident, but it's your fault, if you have liability protection, you get that through your homeowner's insurance policy. Or if you don't own your home and you rent and you buy a renter's insurance policy, then you have that same liability protection that follows you anywhere in the world. If you do something that you are negligent, you are liable, and somebody else gets injured, or their property gets damaged, and you end up being liable for paying for that damage, whether it's bodily damage, injury, or property damage, either one, your policy, the liability section, pays that claim. You file a claim, you're liable, you're negligent. The insurance company does an investigation. These are the types of investigations or claims that I handled when I was a State Farm claims adjuster. So I've done claims adjusting for many years. I still have my adjuster's license. And I'm telling you the truth that there are certain protections, certain policies, certain coverages that are very inexpensive that give you a tremendous amount of protection. And liability is one of those. Long-term care insurance is not cheap. I do have long-term care insurance. Myself and my wife, I bought it when I was 38 years old. Now, here's the deal with life insurance and long-term care insurance and disability insurance and health insurance. Those are all cheaper if you're younger, if you're young and healthy. So just think about life insurance for a minute. I don't know if you think life insurance is important. This was really going to be this week's secret class collaboration, but it's not. We're doing the links. Remember those links? That's your secret class collaboration. To check out those links and tell me if they work. Hopefully they do. That's your simple secret class collaboration this week. But I wanted to use life insurance, and I was just going to pose the question, and you're welcome to answer this question. I would love to hear what you think. But if I were you, if I were young, and someone asked me if I wanted to purchase life insurance, I would say yes or no. I'm curious, what would you say? Now, when I was your age, when I was young, in fact, when I was in college, I got married and we got pregnant, and we had our first child while I was in college. And so for me, life insurance made sense. It was important. But then life insurance the type of life insurance you buy makes a big difference. So I'm curious, first of all, even if you don't have any dependents, anybody that really depends on you right now, if you knew the secret of life insurance, which is this: if you buy life insurance while you're young and while you're healthy, you get at a super duper discount. And you can lock that discount in for decades, or you can lock that discount in for the rest of your life. So if you knew that secret about life insurance, would it change your mind about purchasing life insurance sooner as opposed to later, even though you may not actually have anyone who depends on you? If you died right now, maybe your parents would have to pay some funeral costs, but nobody has to worry about living your contribution to their living expenses for the rest of their life. Like my wife is my responsibility. That's just my value system. I'm the man, and it's my job to take care of my family. I am the one who is financially responsible for, the cost of living for my family, for my wife is my family, and our dog Lucy. And so that's my responsibility. But I don't know about you. I don't know how you feel about that. Like, if that's something you would want, to be able to say, I'm responsible for the people I love, financially responsible. And one of the ways that I'm going to make decisions and choices about what I do with my money is I'm going to purchase a life insurance policy to transfer the risk of me dying so that I can provide for someone I love after I'm gone. So maybe you don't have anyone in that place right now, but my question would be, again, very simply, if you knew the secret about life insurance, that you can buy it super cheap when you're young and healthy, and you could lock that discount in for the rest of your life, if you knew that was true, would you even consider possibly taking some of your spending money that you're spending on that cool car or that really nice house or that credit card, buying stuff you probably don't really need? Would you choose to allocate some of that money to a life insurance policy? Now, probably by now, if you're listening to me, you're thinking that dude is trying to sell me life insurance. And I'm really not, because I do have a license to sell life insurance. I think I haven't checked it in a while, but I'm not trying to sell you life insurance. I don't get paid. I don't sell any commission products, by the way. But I do believe in life insurance, and I own quite a bit of it, and I purchased it on my kids when they were very, very young. And some people thought that was morbid, to buy life insurance on your own kids. Maybe you think that's morbid, but I thought it made a lot of sense because I knew the secret of life insurance, which is the younger you buy it, especially if you're a child, if your parents are smart enough to purchase life insurance for you when you're 2 years old, they lock in that discount for the rest of your life. And then at some point, when you are financially responsible, they can give you that policy that they locked in when you were 2 years old. It's a ridiculous secret about life insurance. But I'm just curious, if you knew the secret of life insurance, would you be curious about what it might cost, and maybe possibly would you consider making a decision to do that, or maybe even for your own kids? And if you're my age, for your grandkids. I haven't done that for my grandkids yet, but you know what? I may do that for those are my grandkids. That's Maddie. I think she's chewing gum. Her teeth are fine. I don't know what's going on there, but anyway, that's Caleb, the upside down goofy guy, and my daughter Carissa. And yes, I did buy life insurance for Carissa when she was young, very young. For all of my kids, 3 of my kids. I only have 3 kids. But anyway, that's just a question. Life insurance is such a big topic. When we talk about personal financial planning, when we talk about risk management, when we talk about transferring risk to the insurance company, there are some really smart ways to do that can be life-changing in terms of the big picture for your financial future. And I just can't not mention life insurance. And disability insurance too. It's just not talked about very much. I want to put it on your radar. I want you to think about it, because statistically, by the way, 1 in 5 people will have a disability that lasts for more than 3 years. Or maybe it's between 2 and 3 years. I'm not sure. But disability insurance is not cheap. But it is something that statistically you will need in your lifetime. And it's something you need to think about when you start working. You can't really get disability insurance until you start working and earning an income. The whole point of disability insurance is to replace your income in the event that you're hurt or sick and you can't work. And most employers provide some level of disability insurance, which is great, and you should accept it, take it, pay for it. If they offer it, there's usually a cost, but it's a reduced cost because it's subsidized by your employer, and you absolutely want to take advantage of that. And if you didn't know that before, then great. That was worth paying attention to this lecture to know that disability insurance is a very important part of your financial future and your personal financial plan. And it's not just about this semester and getting an A. It's about basically taking advantage of some of the things that are available to protect you, protect your assets, and disability insurance is an important one to consider. You're going to do mostly this week auto insurance, which we'll talk about for the next few minutes, and homeowners insurance. Already talked a little bit about long-term care insurance. Let me just mention umbrella insurance, or personal liability umbrella insurance. We call it PLUP, P-L-U-P. If you're in the business, you just say PLUP. They have a PLUP. What that means is you've purchased an insurance policy that provides insurance protection, liability protection, above and beyond the coverages on your homeowner's insurance policy and your auto insurance. So the way it works is pretty simple. I don't actually have an umbrella policy today because it just got too expensive, because I own 2 RVs, 2 motorcycles, a car, a truck, and the more vehicles you have, the more an umbrella policy costs, because every one of those policies has a liability limit. And the personal liability umbrella policy provides coverage above and beyond each of those policies. So imagine if you have as many vehicles as I have in my fleet, by the time you buy the umbrella policy, it gets very expensive. And that's not true for most people. If you have 2 cars and a house, you can get an umbrella policy with $1 million protection. That's above and beyond your home and your auto for a couple $100 a year. Now, that may not be true today, but when I was a State Farm insurance agent, it was literally a couple $100 a year for $1 million protection that went above and beyond your liability protection on your auto and your home. Now, you did have to upgrade your home and your auto. You still have to do that. So if you go shopping for umbrella insurance, you need to understand that your insurance company is going to require you to upgrade your liability protection, because they require that you have a minimal amount, and their minimal amount is different than the minimal amount that is required by the state, which is one of the questions on your quiz. It's a Quizlet, actually, and I do believe that's one of the questions, is how much coverage is required in your policy. And so I'm going to see if I can find that real quick. I think I have it in this post. I'm looking for it now. But you will do a Quizlet. It's not a quiz this week. And I do ask in Money Study Group how you feel about Quizlets. I've found, by the way, that Quizlets are quite, students like them. It's a different way to do a quiz. So let's see. I'm still looking, but I'm not seeing it. Okay, here we go. I think I found it. I did find, yeah, here it is. So I'm going to get rid of this. So this is Texas specific requirements. And if it's not on your quiz, it should be. And I think these are accurate. They do change, but Texas specific requirements. Remember, I told you that if you wanted to buy an umbrella policy, you would have to increase the coverages on your policy because your insurance company requires that you have a minimal amount. But it's different than the minimal amount from the state of Texas, or any state for that matter. So these are numbers that you're going to need to get for your insurance quote this week. So I'm going to talk about these for a minute. There are 3 numbers when you look at your insurance quote. They used to just be a number, a slash, a number, a slash, and another number. So, for example, pretty typical package that we would provide in terms of quotes for new customers. And again, I was a State Farm agent, and I was in zip code 77062, which, if you checked it out, at least when I was a State Farm agent, it was one of the most affluent zip codes in the country. We had the nicest houses, the most expensive houses. We had I can't even remember the name of the golf club that I was a member of for like 5 minutes. Very expensive. I'm not a big golfer. But anyway, it was a very wealthy neighborhood. And so when you're in a wealthy neighborhood, your packages would be different with higher coverages typically than if you're buying insurance like down in the Fifth Ward or wherever, because it definitely changes the price of the product. Most of my clients had umbrella policies because it just made sense. They had a lot of assets to protect, and the umbrella policy is an asset protecting machine. But these are the basic minimal coverages in the state. So let me talk about them for a minute. So if I said 150, or if I said 50, 100, let me see for a second. I have to 50, 100. Yeah, 50, 150, 50, 150. So the first 50 is for bodily injury. And I hope I'm not getting this confused because the numbers, there's 3 numbers. One of them is per accident for one person. That's what I'm going to say. 30, let's say 30, 60, 25 is the number that you see. The number's 30/60/35. And what that means is $30,000 for bodily injury for one person. So for example, you get in an accident and people go to the hospital. Let's say you get in an accident with a school bus and the driver goes to the hospital and 10 kids go to the hospital. And one of those kids that goes to the hospital has a hospital bill of $35,000. Well, your policy is only going to pay $30,000 for that child who was injured, who went to the hospital because of an accident that you caused. The maximum that one child will be paid is $30,000, even though they had a $35,000 hospital bill. Now, if they had a $35,000 hospital bill, they probably have a claim against you for more than just the hospital bill. Maybe they have some pain and suffering. Maybe they have other extenuating damages that are a result of that claim. Maybe they have permanent disabilities or disfigurement from that accident. Who knows? But my point is, the reason you buy insurance, car insurance, and the reason that you have to pay attention to the liability limits is because you need to understand how much the maximum your policy will pay. Now, in that same accident that you caused, where the school bus driver and 10 of the students were involved, and let's say 5 of those students, in addition to the one that had $35,000 in damages and hospital bills, let's say that 5 additional students went to the hospital and had $20,000 each. That's $100,000 plus the $35,000 for the student who had that was on the school bus, the passenger who had the $35,000 hospital bill, not to mention the driver who had a $25,000 hospital bill. So that's 25, 35, and 100. So that's 100, and if I'm doing my math right, 140 grand. So 140, what happens to you? You have $60,000 coverage. That's per accident. So that doesn't mean per person. Each person, the max they can get is 30, but the maximum that your insurance company is going to pay for an accident that you caused that was your fault, the most they're going to pay is 60 grand for that entire accident for bodily injury. Does that make sense? Chime in if you have any questions. I'm looking. I don't see any questions in the Zoom room. If you have a question there on the let me make sure nobody's waiting to get in. Yeah, if you're watching on YouTube or Facebook and you want to ask a question, feel free to do that. And if you're asking a question in GroupMe, hopefully the students who are paying attention now will be able to answer your question. Let's talk about property damage. Same thing. This is per accident, $25,000 per accident. What did I say the scenario was? I said you got in an accident with a school bus. And this school bus, by the way, it's one of Kamala Harris's favorite kind. For extra points, you can post in the comments what kind of school bus is Kamala Harris's favorite kind of school bus. If you don't know the answer to that, I'm sorry, you haven't been paying attention. Because there is a type of school bus that is very expensive. And I'm not going to say that it's actually worth the money, because I'm a master, or used to be a master mechanic, and internal combustion engines are pretty awesome if you ask me. But Kamala Harris prefers a different type of vehicle in a whole different category that involves a whole lot of things that make no sense to me. At least they make a little sense, but not in a school bus. But the point is, your policy has this much coverage. And if you're not looking at the screen, if you're just listening, that's $25,000 property damage is what your policy has. So that is not a lot of coverage. 25 grand, because in this accident that you caused, where 7 people ended up in the hospital with a total of, I think we said, $140,000 damage, and your policy covers only up to $30,000 per person, and one of those people, who is a person, had $35,000 in hospital bills, plus who knows what else, for pain and suffering, disfigurement, disability, future surgeries. All of those things become part of the claim. And $60,000 is what your policy will pay for the entire accident, when you had a whole lot more than that. And you have $25,000 for property damage. And that school bus, here's the answer to that question about what is Kamala Harris's favorite kind of school bus. It's an electric school bus, and that's what you hit. And it was your fault. In this accident, the damage to the school bus was pretty epic, because it hit the battery center in the school bus, and all the batteries are damaged and have to be replaced, which means the entire school bus is a total loss. And the cost of the school bus, because it's an electric school bus, it isn't the normal $160,000 for a school bus. This is more like, actually, I don't know what a school bus costs, but I would bet $100 that if you bought a school bus that had an internal combustion engine, and then you went and shopped for another school bus that was Kamala Harris's favorite, an electric school bus, the cost difference would be at least 100%. I may lose $100 on that bet. But yeah, I'm saying it's twice as expensive. But point is, you have $25,000 in protection. Is that enough? So that's the example for the Texas specific requirements. When you do your quote, you have to decide what is a reasonable amount. And again, remember, please, when you get your quote, I want you to be thinking about the fact that you fast forwarded your life to the place where you're actually working in your dream job, and you're actually making an amount of money that is based on your ability to land that dream job. So don't just go, okay, I'm going to look for the cheapest insurance. Just think it through, like you've got a house now that's an asset. You've got an income that's an asset. And that's another point I want to highlight, because typically, if you have assets, you need to be protecting those assets with sufficient liability protection, okay? But one of the assets that you have that you may not have thought about is your earning income. So if you've got that dream job that you landed in your imaginary life, if that's the case for you, then you have a future income, a lifetime income that is an asset. And if you don't have the money to pay this claim because you cut corners on your insurance and you bought the cheapest insurance you could get, and now you had this claim, and now you're basically on the hook to pay it, and you may not have the money to pay it, and you may have no assets that you could sell to cover this lawsuit. But what asset do you have? What asset do you have? I'm not going to answer that. I'm going to leave that question for you to think about. What asset do you have? Because that is the asset that I'm going to come after you for. assuming that my child, my grandchild, was the one who went to the hospital because of your accident, because of your negligence, because you were texting on your phone and you caused this accident, and Caleb went to the hospital, and Caleb will never walk right again. And he's got some nasty cuts in his face, his beautiful face. I'm his granddad. I'm going to help get the attorney, and I'm going to sue you for as much as we can get for Caleb. And the asset that I'm coming for, that asset that you have that you never thought about, that's what it's going to cost you for the rest of your life. So all I'm saying, trying to do that kind of scary thing, because I want you to become a good consumer of insurance. I want you to learn about the cost of insurance, and not just how much it costs, but what can you do to manage risk in your life. So when you go to do your homework this week, you're going to read, you're going to, have lots of content to look at and think about. Primarily, I want you to get an auto quote, and I want you to tell me, what did you learn about these coverages? There's tons to learn. I can't possibly go over all of it in one lecture. We could do an entire semester on insurance, but that's it for today. If you have any questions, I'm happy to hang around and answer them. I would encourage you to, jump in and look at the post that's linked in this video if you want to have like a quick overview of it's a ton of content in this post, and I just kind of dumped everything into one post to give you an idea of kind of what we would talk about if we had a lot more time. So that's what's in this post if you want to check that out. And again, that's linked in your video. And if you're not sure where to go to uhplaylist.com, and that will take you to the playlist where this video will live in about 10 minutes when I end this broadcast and end this Zoom meeting. So I am now going to end the broadcast, and then I will go and have a quick chat with the folks in the Zoom room to see if they need anything. And other than that, next week's spring break. Have a great spring break, and I hope you will consider connecting with me on LinkedIn if we haven't already done that. Like the video, share the video, subscribe to the channel too if you haven't done that. This is my YouTube channel. That's the wrong button, but do subscribe to the channel if you haven't done that. If you want to get notifications when I post a new video, whether it's a live stream video or a topical tutorial video. Most of my videos relate to personal financial planning, and then we do some fun stuff, lots of fun stuff too. But if you want to get notified, it is my personal channel. It's kind of new, and I have like 10 subscribers, so I'd love to have you if you want to do that. If you're a YouTube user, you definitely want to do that. If you're not, you probably don't. So that's it. I don't see any questions. I'm going to end the broadcast and hit the finish button now.